GME. So these are effectively your meme stocks. So going from Reddit, etc., all that. So let's actually have a look at what's been going on with the price action and also just any fundamentals within the stocks, within the companies, seeing what basically they've been going, seeing basically what they've been up to. All right, so looking at AMC first of all, as you can see, very interesting pattern I've showed currently on the daily chart on TradingView. All right, so it's been very interesting. I mean, going way back to pretty much the start of January or the end of January, pretty much put you guys on AMC, I believe around, what was the price? Actually, it was like $2.95 or something I put you guys on. Pretty much I saw it was about to jump, right? And a lot of you guys on the video, or a couple of guys on the video, were saying, oh, I don't believe it's going to jump. I don't believe, oh, you're talking nonsense, etc. But literally a couple of days after that, it jumped and skyrocketed all the way up to $20. So that was a very good call, you know, at the moment. So, and since then, effectively, I've had some issues. And since then, it's basically just plummeted, dropped all the way down. There's been a huge pullback, which has been great because it's given me the opportunity to get in or get back in pretty much lower, you know, get back in on the dip. And since then, the price pretty much consolidated around 565 or 570, and from there it pretty much took off, right? So that consolidation created a good, very good base. Okay, so a very good bullish support base, and since then the price has just taken off, right? So by the looks of things, it's created on the daily chart, it's created a cup and handle. So a cup and handle pattern. So a cup and handle pattern is effectively a very good technical analysis tool or technique that you can use in order to basically see. So basically the share price falls, okay, creating one side of the cup, and then a base is formed. Usually the base is a lot longer, but this is a very tight cup and handle pattern. All right, so the base of the cup is formed, and then after that, you create effectively the right side of the cup, the side of the cup that has the handle, and then you treat the handle as effectively a resistance, so a trend line resistance, so dynamic resistance. So pretty much the price jumped above or broke this resistance of the handle around on the 8th of March. And since then, it's just been going up. Okay, so that's a very good sign that technically the MT share price is going to take off. Okay, it's going to head towards $20, I believe. You know, especially seeing as it's going to head towards $20. But the earnings announcement for AMC was quite bad, the yearly, which was very expected, the 2020 earnings announcement for AMC. It was expected that it was going to be bad because, come on, it was around the time that you had the C-19, the whole pandemic, everything. So they had to shut down all the theaters pretty much nationwide and globally as well. They had to shut down the theaters. So I know, right? Blame COVID. So they had to shut down the theaters due to COVID, and nobody was going out to see movies, etc. So it's pretty much sad times though, because like I can't remember the last time I went to see a movie. But anyway, so they had a loss, basically over $4 billion in loss. And this is what they reported. Game. All right. And so let's have a look at game actually. Oh yeah, game. That's interesting. Kind of wish I had got in at $40. That's a great, pretty much AMC and GameStop, they've effectively had similar, if not the same pattern. You know, they pretty much took off these meme stocks, guys on Reddits and all these diamond hands and all these guys pretty much not letting up, So they've pretty much taken control again. All right, so GameStop won't stop. That's all I can say about this. This is definitely heading towards like $483 resistance that it previously formed. But the good thing about it now is it's no longer like moving in terms of being a hype, etc. It's actually now moving because there's a lot of demand within GameStop. All right, so the demand is there. Yeah, I'm in AMC. So I was in AMC actually. I got in about $2.95, like when I was putting everyone on it, and I effectively got out I halved my position around $20. All right, and because I was kind of expecting a big drop, a big pullback, because the share price moved too quickly, too soon. All right, basically jumped from literally $4 all the way up to like $20, which was mad. So I thought I saw a pullback happening or bound to happen. What's my price prediction for Monday? All right, so for AMC, all right, so my price prediction, I believe, for AMC, it's actually quite interesting because it's actually quite interesting looking at it just now because it looks like it's just broken out of this $11 resistance. Okay, that was formed on the 25th of February. Okay, so if we have a look at the intraday chart, so it's very much just marginally broke above it. Okay, and as you can see, the after hours is literally up by 4 cents. Okay, so now that it's broken this resistance, I believe if this resistance holds intraday on Monday, or if there's a gap high on Monday, and basically if Monday's session holds above this resistance, then I'll be inclined to see this as a support. So to answer your question, I believe it can easily get to, I would say it could even get towards maybe not Monday, but next week or the next coming weeks, I can see the share price getting towards $20. So initially it has to get towards 12.50 and break above that resistance or that temporary resistance at the moment. So I'm hoping Monday's session would actually break this $12.50 resistance or $12.50 resistance. So, but it's pretty good that despite the actual earnings being bad or being seen as bad, this for 2020, it's actually good to see that the share price is rising because a lot of investors, they totally understand that AMC's share price, they totally understand that AMC's like loss, 2020's loss over $4 billion. They totally understand that, and that was primarily due to COVID-19. So but having a look at GameStop at the moment, it's been heading up right now, I believe, because right now I'm using the 10-period moving average. So the price is pretty much gone away from the 10-period moving average. So right now it's going to revert back to the mean, but after hours is at 266. So I'm expecting a minor pullback for GameStop effectively towards this 10-period moving average. And then this 10-period moving average or the moving average can effectively act as a support. So if we have a look at, if we look a bit more long-term on GameStop at the moment, so let's just add a couple more moving averages. Okay, so 1, 2. So I'm gonna add literally, let me see, I'm gonna add the 20. All right. In fact, you know what? Let's just add the 50. All right, because these are long term. And let's add the 200. Okay, so if we make that black and we make this red. All right, so as you can see, pretty much at the start of the whole craze thing with GameStop, all right, so GameStop got above, or it's been above the 200 period moving average for quite some time, which means that it's been bullish, right? There's been a bullish trend. Effectively just had to pick up some steam, fuel up the rocket and take off, in which case it did, right? And it's effectively stayed, it used the 50 period moving average as a support for some time. Okay, pretty much from November all the way up to pretty much now, and it's above it. And the interesting thing about GameStop's share price is it came below this 50 period moving average, which could have been seen as bearish for the midterm, but the share price has gone back above it on the 24th of February and is staying above it. So I can see a lot of good things for this price in terms of being a bullish trend for GameStop. And the same goes for AMC. So if we have that, the same goes for AMC. As we can see, the share price came above pretty much just after I did the video putting you guys on it. The share price took off and came above or went above this 200 period moving average, which for the long term, these are the 200 period moving average is effectively like 200 days because we're on the daily chart. So that's the moving average. Smoothened out the price. The moving average smoothens out the price action for a number of periods. In this case, 200 moving days or 200 days. So you can imagine for 200 days, the price is pretty much bullish. Okay, the price is up in an uptrend. So you can see that as very long term, near enough like 6 months to 1 year. All right. So I can see the share price for AMC pretty much for the next 200 days or the next 6 months to a year being bullish. All right, being in an uptrend. So for the long term, for the 6 months, for my 6 months prediction, I can even see this getting towards 50, 60, $70. AMC, that's no joke. The same goes for GameStop. Well, GameStop's already pretty much way above that, but I can see it pretty much staying in this price range. All right. Staying above $200 or at least 100, at least above $160. So but with GameStop, it'll be interesting because we've got an earnings call coming up on the 23rd of March. So pretty much next week or in a couple of weeks, we're getting the earnings call. So the last earnings for GameStop was positive, actually, so which was a good sign. A lot of investors were seeing that, GameStop, they're doing well. In fact, if we have a look on exactly what the earnings was. So currently going on Yahoo Finance to have a look. All right, so the last quarterly earnings actually was, so the last quarterly earnings, they were at a loss. Okay, so Q4 of 2020, they were currently at a loss, but that loss was a lot less than Q3, but that loss was a lot less than it was in Q3, which is why the surprise is positive. So there was a surprise of pretty much positive value of 66%. So they were 66% better off in terms of earnings than they were in Q3. So this was a good sign for investors because you know what, if you're doing fundamental analysis, any sign that your company is doing well, is a good sign. So anytime the earnings are doing better, even if they're running at a loss, because bear in mind, a lot of companies actually run at a loss quarter on quarter, they run at a loss or they run positive, etc., or at a profit. But if they're running at a loss, that's fine. You can understand, you can forgive them for doing that because they've got liabilities, they've got business to run, etc. So, but if that loss is getting less and less quarter on quarter, it's effectively the same as looking at the quarter on quarter being positive, being in profit. All right. So that's a good sign. So if you see that within your company, your favorite company, or just a company you heard that, or they're doing good, if you see that as a sign, then that's a very good thing. All right. If you see that getting better quarter on quarter or annually, they're getting better, that's a good sign, and fundamental analysis pretty much tells you what to buy, tells you the good companies to buy in or to invest in, but technical analysis tells you exactly when to buy. Like for instance, looking at GameStop. Okay, so if you were looking at this fundamentally, you'd have been like, you know what, the surprise was positive. All right, they did better than the last quarter. So the quarter four, they did better than quarter three. So you'd be like, you know what, let's do this. Or quarter three, they did better than quarter two. So you'd be like, you know what, this is a good company. So far, they're doing good. All right, especially if they've been progressing quarter on quarter. And then the technical analysis would have told you, all right, so this share price or the price has actually gotten down to the 50-period moving average, and it's effectively showed some bullish signs. So it's effectively bounced or consolidated on the 50-period moving average. And there's bullish signs that the share price is about to start rising. So you think, you know what, this is a great time to get in GameStop. Okay. And this is partially why I got into GameStop. In fact, when I got into GameStop, I got in at $19. And this is what I saw. Actually, I got in on this candle. So what I saw with GameStop was, I was like, you know what? All right, so there was a resistance here. So I saw that there was a good bullish run, good break above this resistance. Okay, so, and how I knew there was a good break above this resistance, there was the volume accompanied the break. So there was a volume of 25 million shares being traded that day, all right, for it to break above that resistance. And this was pretty much double the average volume that's being traded. Okay, so a lot of people were getting in that. There's a lot of conviction about that. There was a lot of conviction about the bulls breaking through that resistance. Even though it came back and dipped below the resistance, but the bears didn't really have as much conviction as the bulls did. All right, so the bears tried to bring the price back down that resistance. So you could actually see that, or looking at it looking at that pretty much from the naked eye, you think that, oh, you know what, that's a false break. All right. And then you think, you know what, GameStop, they tried, they failed. But looking at the volume, there wasn't that much volume for the bears. Okay, which is why the bulls came back with a vengeance and pretty much just took this price up, So yeah, that's really, it got me all excited when I saw that, on GameStop. Got me very excited, when I saw this candle. So I was like, you know what, school is a session. We're gonna school these bears. We're gonna show them what we're dealing with. But I was a little bit surprised about the magnitude of this move. Pretty much gone from $65, or $19 all the way up to like 483. That's a mad one still. And the same goes with AMC. All right, I pretty much use the same like thought process I did with GameStop getting into AMC. But I was a little bit more excited about AMC because when I got in, AMC was a penny stock. Okay. A lot of short sellers, a lot of bears, etc. in the market. They predicted the AMC theaters were going to go bankrupt. All right. They saw 2020, they were rubbing their hands thinking, you know what, let's make this company go bankrupt and let's profit when doing that. And in a way, I didn't like that because I like AMC. All right, I like the going to the theaters, etc. So I didn't like that. It's one of the companies I like. So I had some kind of sentimental value towards AMC, as I did with GameStop actually, because I enjoy playing games as well. But anyway, I had some sentimental values with these companies, and I invested in them. And I actually saw them making a comeback. turning the business around, and they were doing things. And at the time, AMC were taking out, I believe, a loan of like $900 million. They were taking out a loan, and a lot of people were seeing this as a negative again, because after that news was announced that they were taking this loan out, pretty much the bears started stepping in. There was red candles, there was bearish days, etc. But that's cool. That's cool. But what I saw with that loan is that was an opportunity to turn the business around, and especially as an opportunity to actually stay above water, because 2020 wasn't easy for them. Let's face it, all right? They had to shut the doors for a lot of their theaters. So there wasn't that revenue coming in. Okay, especially how before 2020, I believe 2019's earnings was somewhat decent. They were at a loss, but it was very small. It was like $100 million or something loss, the earnings. So they went from that to over $4 billion in loss, okay, or earnings and loss, yeah. So this was seen as a bad thing, them taking out a loan. They could have seen as, they were biting off more than they could chew, etc. But I saw it as, what, definitely offset a lot of their loss and use that $900 million to effectively keep business running, all right, while the whole C-19 or COVID-19 thing was pretty much taking place because eventually they were going to come up with a vaccine, because this virus wasn't a joke. So they had to come up with a vaccine. So eventually they had to get life back to normality. So 2019, they took the hit. They were like, you know what, let's do what we can do. Normally businesses might be like, you know what, let's throw in the towel. We're done. We can't come back from this. But AMC, and they've been around for a long time. All right. So they've been doing business for a long time. So AMC were like, you know what, we're not throwing in the towel. We're keeping this thing going. We have strategies. We've taken out this loan. We basically have a plan for this company, and that's exactly what they did. And that is partially why I got behind AMC. All right, so I got behind AMC initially because of this. Fundamentally, I saw, okay, they were looking to do big things. They were looking to pretty much turn their business around, all right, because they were on the verge of bankruptcy. Well, guys were trying to make them go bankrupt, like bearish short sellers. They were shorting this and enjoying the ride, etc. So they started doing they didn't want to go bankrupt, basically. So they wanted to turn the business around. So I saw this as an opportunity. And also, I have sentimental values towards AMC. I just wanted to get behind them, support them. And of course, profit when the share price rose. I saw that move like towards $20 or even beyond. I saw that move happening within 6 months. Okay. But I didn't actually expect it to happen within a week. Okay, which I was grateful for, and I enjoyed the ride, trust me. Same with GameStop. Okay, so yeah. Do I think GameStop will hit 500? Oh, definitely. Definitely, I believe it will hit 500. Actually, it's well on its way towards testing this it's definitely well on its way to testing the $483 resistance. Okay, that was created initially with this crazy move on the 28th of January. But I believe before it gets there, it has to overcome this temporary resistance, okay, that's been created pretty much on the 10th of March. So the resistance of $350 roughly, it has to overcome this. So if the price gets above this and stays above this for 1 or 2 sessions, then I believe it's definitely on its way up. So whenever do you think that? I think it would double. What do I think of BlackBerry? All right, so let's have a look at BlackBerry. Oh, actually, yeah, BlackBerry is pretty much the same. Funny enough, the stocks that I got behind. All right, so AMC, GameStop, BlackBerry, and Nokia, which interestingly actually all turned into meme stocks. But I got in these stocks before they were meme stocks. I even did a video on Nokia A little sidetrack. I even did a video on Nokia about 6 months, 7 months ago when it was like, let's just have a look. I did a video on Nokia when it was around, I think it was around here. Like I did a video. Actually, yeah, it was around this price, $3.38. Okay, and since then it pretty much took off. But getting back to BlackBerry, um, I think BlackBerry in the long term, I believe BlackBerry in the long term will do well because they're doing big things actually. They've got a lot of like cybersecurity contracts that they're working on at the moment. So they're getting contracts, they're getting business. So they're doing well. Like BlackBerry, I think in the long term, it's definitely a long term hold, especially as just having a look at this. All right, the share price pretty much took off, and now it's part of being a meme stock. And the price has pretty much come down to test this what was a resistance before at $9.75. Okay, it tested it and it broke it, but that was a false breakthrough or false breakdown. That's the correct term. It was a false breakdown because the bulls pretty much took the price back up, and in fact even gapped above it with a lot of volume. All right, so roughly the same amount of volume was traded that day as the average volume. Okay, so volume of 21 million shares was traded that day, and that was a gap up, and it stayed up. And since then, it's pretty much formed, it's consolidated around this. So I think it's safe to say that $9.50, I think it's safe to say 9.75 is a good support. So for the long term, BlackBerry is definitely a good long term hold. But unfortunately, I sold my BlackBerry shares. I kind of a little bit embarrassed to say this. I kind of had paper hands with BlackBerry. I wanted to get out around 25, pretty much do what I did with AMC. I wanted to do with BlackBerry because I kind of saw it effectively reverting back to the mean. So reverting back to the moving averages. All right. So whenever a price takes off, if it takes off too quickly, too soon, and it gets far away from moving averages, more than likely, or more often than not, it actually reverts back to the mean. So it reverts back to test the moving average, which it has done. Initially did with a 10-period moving average, and then continued falling to the 50. Okay. And effectively, it didn't go as far as the 200. But yeah, John, I agree with you on that one with market manipulation because a lot of people have actually been having issues buying up the stock at the time where it was a meme stock. They pretty much, I think Wall Street, just to avoid like people breaking the system, basically avoid a lot of Reddit people, a lot of Reddit users, a lot of people like, yeah, the whole trend, people jumping on this trend and effectively breaking the system and having too much demand and not supplying, pretty much screwing up a lot of short sellers, basically the whole system. They had to halt a lot of trading, like buying of these stocks. Okay, so these were meme stocks, and you would have probably seen it. A lot of news articles or a lot of agencies like the Motley Fool, etc. They started publishing articles, basically bashing all these meme stocks, telling guys, look, it's over. They're going to crash. Get out now. Basically, trying to get a lot of people to sell, like sell the shares, etc., and effectively turn diamond hands into paper hands and start getting scared, etc. And just so that people would sell their shares, because there was this whole thing going around like, oh, we're going to hold, let's hold everything, let's hold the stock, hold the line. Like I was on Reddit, I've been on Reddit a few times around that time, and I was loving all the memes. I've got to say, like all the memes, all the videos, everything. I was actually loving them. Like it was a good laugh. All right, but yeah, with BlackBerry, I pretty much, yeah, I ended up having paper hands because I wanted to get out $25, all right, and then get back in around the moving averages when it reverts back to the moving averages. But as you can see, it pretty much dropped, and I believe I got out around $16. All right, so I'm embarrassed to say I had paper hands, but you know what? In this whole game, it's all about making profit. It's all about profiting in this game. To be honest, yeah, you can hold, but only if you believe something. I had a strategy, pretty much want to get in when it runs up, take half profits or full profits, and wait till it pulls back because there's always a pullback. All right, the pullback might not be high or it might not be big, but there's always a pullback. And in the case of BlackBerry, AMC, GameStop, Nokia, this pullback was crazy. All right, so I saw the run up initially, and I just wanted to pretty much get profits and then come back. Like pretty much get back in lower and then enjoy the ride back up. If it went back to being a meme stock, because let's face it, right? Those with the whole hype, with all these meme stocks, there was a lot of bag holders. All right. There was a lot of guys getting in at the top, at the peak, getting up, like when like these stocks effectively taking you to the promised land, all right, getting you to that mountaintop, but you don't get on at the top of the mountain. You get on and then you effectively walk your way up. You enjoy the ride up, and then you take profits and then come back down, get back on, enjoy the ride up. Because what goes up always comes down, and vice versa. So a lot of these guys got on at the top and effectively just fell off that mountain and became bag holders. So yeah, they pretty much were hoping that it would go back up. So effectively the share price was bound to rise back up because these guys, they'll pretty much start putting more and more capital into these buying. There'll be more demand into these stocks. And not only that, these are genuinely good companies, So despite all this hype, the news, the attention that these stocks have gotten, especially with GameStop and AMC, despite all that news attention, there's actually a lot of investors that literally got in and are holding this for the long term. I'm one of them now because I've gone back in, or what I've been able to get back in. I've gone back in. I missed the boat on GameStop. The second boat, I got on the first boat. I've missed the second boat. So the price right now is too high at the moment. If it comes back down, I'll get back in. But AMC, I'm back in, and BlackBerry, you've just pointed my attention to that. I may get back in it if there's a dip and hold it for the long term. Because when I was getting into these, I got in pretty much for the long term. The reason I got out was because I wanted to secure a lot of profits because they all run up very quickly, too soon. And what I was hoping to achieve in 6 months to a year in terms of price movement, I achieved those in a couple of days or a couple of weeks, or in fact, just over a week, So yeah, you're right. They definitely stop people trade. And funny enough, like one of the stocks that this is a prime example of is Healthier Choices Management Corp. So the ticker symbol for that is HCMC. So if you have a look at that, oh my days, HCMC it looks pretty good. I'm currently in HCMC. And again, as you can see, look at that, right? That move. I got in around, what was it? I got in around here where this line is. So 0.001. Okay. And then pretty much it shot up to 0.0018. Okay. The next day or the next couple of days. And it's just there was a lot of halting on the trades. Okay, so nobody or a lot of people couldn't buy HCMC, so but they could sell. So a lot of people were selling the shares, thinking, you know what, I can't buy. What's the point? I can't buy more. So what's the point? Let me just sell, or thinking, or there was some market manipulation. There was definitely market manipulation there. I even said in my video, that on HCMC, like the likes of Robinhood, etc., they weren't allowing buying, you know. So there's definitely that market manipulation there. So where is game going to be? What do you mean in terms of the share price or the company? see actually. Sorry about that, guys. Yeah, John, what do you mean? Where is game going to be? Do you mean the stock or like the share price, or do you mean the company? The price. All right. Yeah. So basically, if you have a look at the chart, so I believe right now, like I was saying, reversion back to the mean. So I can see it, or yeah, reversion back to the mean. I can see the share price falling and pretty much testing this 10 period moving average. Okay, so usually people would use 20 period moving average, but I like to have a 10 period moving average because that way I can actually get alerts a lot quicker. You know, like if it breaks the 10 period moving average, then I'm like, you know what, the trend is sort of changing direction temporarily, and then I can act on it, you know, and basically, so I can see it coming back to this 10 period moving average, right, testing it and heading back up, especially as especially as game just like a especially as GameStop, just like AMC, has actually formed. Well, it's a somewhat weird cup and handle pattern, but nevertheless, it's still a cup and handle pattern. So as you can see, it's pretty much falling. You know what? Let me remove drawings. All right. So as you can see, it's pretty much falling. All right. So that's one side of the cup, and it's consolidated, all right, form the base. So if we have a look at the right side of the cup, so it's pretty much broken out of the handle. So the handle on the cup and handle pattern is effectively your resistance. All right. So it's pretty much broken this resistance and it's taken off. Okay. So technically there's so many technically there's so many good things about this share price at the moment and reasons why I can see this share price heading up. Okay, and I can easily see it getting towards $450. All right, and to be honest, I could go as far as saying that I can see it eventually breaking 482. And you know what, it was actually on Reddit and other places, people were predicting a price target or giving a price target by the end of year for GameStop at $1,000. You know, that seems hard to believe, but the way the share price has actually recovered and is taken off, I can definitely see that happening, especially seeing as GameStop looks like it's actually coming into a short squeeze. So if I have a look, let me just have a look at the short flow or the flow interest on oh yeah. So looking at the short flow on GameStop is like 26%. All right. So there's a lot of like if this price continues heading up, then it could effectively get into a short squeeze because there's a lot of short sellers on this stock at the moment. So if the share price actually continues increasing and pretty much keeps going high, so keeps going higher, gets to $343, there's going to be a lot of short sellers that are going to be trapped, and they have to actually cover their shorts. Okay, they have to cover the positions, meaning they're going to have to buy back the positions, because the way short selling works is that, all right, you can either buy or you can sell your shares traditionally. But if you want to short sell, the short seller has to borrow share. If you want to short sell, the short seller has to borrow shares from somebody. All right. And just like you would traditionally do if you borrow and you have to pay interest on those shares. Okay. If you have to pay interest on the money you borrowed. So the short seller has to pay interest on the shares that they borrowed. Okay. So they borrow shares from somebody. All right. And they're holding on to those shares because they hope that the share price is going to fall. And then if they're right and the share price falls, they can effectively buy back or cover the position at a lower price. And this is how short sellers profit in the market. Okay. But so if the share price rises, then the short seller is not only are they at a loss, all right, the short seller has to cover back the position. They have to pay interest on those shares that they borrowed. Okay. And so by them covering the position, by them buying back higher, they're buying back at a loss. And also when they're buying back, they're creating a lot more demand. Okay, they're creating more demand for the stock. So this ultimately will see the share price rise even further, which is partially why there was a huge short squeeze. Okay, and this whole buying back, etc., causes a short squeeze. So a short squeeze is effectively you're squeezing out all the short sellers, right? So a lot of short sellers are panicking that, we need to get out as quickly as possible. I don't care what price I get out. Just get me out. Just get me out. They start trying to cover the positions. And as a lot of people or a lot of short sellers are trying to cover the positions, guess what happens? There's a huge demand for it, so they start trying to get in. There's a lot of shares that are effectively not available. Okay. So because a lot of short sellers they're buying back, they're giving back their shares, etc. There's those who own the shares, then there's short sellers. Okay, so they're giving back their positions. So a lot of diamond hands, especially with GameStop and AMC, they were too stubborn. Nobody wanted to sell their shares. All right, so this is partially why they were having sort of issues with buying. They were halting buying of certain stocks, etc. Because short sellers literally were struggling to find shares to buy, okay, or to buy back to cover the position. So they were struggling. So they had a lot of short sellers trapped, which is partially why one of a hedge fund, Citron, I believe it was Citron Research, they were shorting. They had a huge loss because they were a part of the short sellers that were trapped. I believe they were part of the short sellers that were trapped in GameStop, all right, and maybe AMC. So they had to cover the position. So this causes a short squeeze. Okay, so you have a little window where a lot of short sellers have to cover back the position, and they're effectively squeezed out of the market. And this is basically why we saw this huge surge in price. Okay, so imagine a lot of short sellers that got in here at $157, on GameStop. They were like, you know what? Yes, we're in. We're going to short this stock. We're going to make a killing. We're going to make a huge profit on the 25th of January. All right. And then the 26th of January, you know what? They thought, even though we're currently in January of 2021, they were already having a bad year. They already hated 2021 because of this surge in price, and pretty much got them back to effectively where they entered So they started panicking, thinking, especially looking at the volume at which this bullish candle or this session was traded at. 178 million shares were traded, and it was mainly bullish. Okay, so you can imagine the look on short sellers' faces. They're like, what? Like the next day they got in, and these guys would have gotten with huge position sizes, because $157 price for GameStop, they believed, what, this is unheard of. This is a glitch in the matrix. All right. There's no way this is going any further. So they wanted to basically get in there and most likely try to get out at $80, $50, because that's a huge swing. All right. That's a huge profit. And hopefully even short the stock down to $2 or $19 or wherever it started from. But the next day, they looked and saw, what, diamond hands are in force. Like there's no way the bulls are letting up. There's no way the buyers are letting up. So they start looking around like we need to cover these shares, farm. We got to cover these shares. All right. So they were starting. I don't know if you guys have seen that John Travolta meme. He's looking out, like popping out the wallet, like looking around. That was all the short sellers at that point, you know. So they started looking to cover, and effectively the next day, 27th of January was pretty much the end of the year. There were a lot of them were curled up in the ball crying and stuff because that was a mad one still. I mean, they had to try to cover that. A lot of them were in huge losses. They were panicking, pretty much squeezed out. And effectively, I believe there might have been a lot of halting on buying of GameStop at that point, and the same with AMC. There have been a lot of halting on buying of AMC. So you were allowed to sell at that point. A lot of brokers were allowing the sale of AMC and GameStop, but they weren't allowing new buyers because they knew there was a huge queue of buyers, especially people that are trying to get in on the hype, trying to get in. There was a huge queue, all right, waiting to get in. So yeah, they were halted. They had to halt it because if they didn't, like Diamond Hands guys, all this hype, they would have blown the share price out of the water for GameStop and AMC. And that's a fact. They would have done that. And a lot of short sellers, they would have pretty much made a lot of institutions go bankrupt in the matter of a day or two. In fact, I believe a couple of institutions actually had to get bailed out, like they had to get, which I find funny, because if retail traders, if we make a wrong call on, let's say, a position, we make a wrong call, we say, okay, it's going to go up. The next day, the share price drops. We take the loss. We have to, we have to learn from our, experience. I wouldn't say mistake. We have to learn from our experience of that trade and then get back in. But if institutions make a wrong call and, like, for instance, trying to short GameStop and AMC, basically go against the whole Reddit community and the whole hype community, everybody trying to get retail traders, we had a voice, we took a stand. So if institutions make a wrong call, why do they have to get bailed out? Maybe they should just be let to fail. But I guess there's a lot more to it than that, like, but yeah, I don't get how they can get bailed out and then business carries on as normal the next day and they're doing the same thing, whereas a lot of institutional traders, if we make a wrong call, we have to learn from our experience. So maybe all these short sellers had to learn from their experience. And by the looks of things, they haven't really learned much because the same thing, history has repeated itself or is currently repeating itself because they were shorting this stock all the way down to $5 for AMC. All right. And for GameStop, they were shorting it all the way down to roughly around $40, So right now they've gone back up. Okay. They tried to short again and they failed. They shorted it from 190 down to 92 or 88, but it's gone back up. So it's like they never learn from the mistakes. So who's all in AMC and GameStop? But yeah, the short flow on GameStop at the moment is 26%, which is a good sign because yeah, there's a lot of short sellers. So this we might see another short squeeze, especially as we're pretty much in a strong uptrend. All right. So currently obeying the basically the currently obeying the trend line. All right. So the pretty much this is acting as a dynamic support. So yeah, so it's pretty much on the way up. So I can see if the share price pretty much breaks this, which coincides with the 10 period moving average. All right. So that's partially why I go for a 10 period moving average, because more often than not, it actually goes with the, let me just remove that. More often than not, it actually goes with the trend line, all right, as a support or as a resistance. So if you have that, as you can see, you know, the moving average pretty much goes with the trend line. And guys, I've just before I came on live, actually, I did a video on AMC and GameStop, so that's going to go up tonight. All right, so that's pretty much a technical and fundamental analysis, so pretty much in depth with it. But I just thought I just wanted to come on live, get to know you guys get to know me, and just like very informal, just have a chit chat, you know, like talk about pretty much two of one of my favorite stocks. All right, so AMC and GameStop, you know, these stocks have been great. You know, they've pretty much helped me see a lot of greens in my portfolio. You know, I normally see greens in my portfolio, but these ones were mad. You know, like yeah, so they're definitely up there, you know, and basically to strike gold with them in the first month of 2020, right? At the start of 2020, to strike gold with them was great, you know. So effectively, what you could have made on those, you would have been sorted for like 5, 10 years, depending on how many shares you got, you know. So they're definitely up there as my favorite. You know, I'm just hoping game kind of falls down, dips a little bit, definitely down to 187, and I'll definitely get back in. You know, I can kind of see it going towards there, towards 187. All right. If it breaks this 10 period moving average, then I can see it heading towards 187. All right. Or 185. And then testing this it's already tested it as a support. And to be honest, it's a good support. So I'm hoping it comes back and retests it as a support, but I'm not holding my breath on that, because the way all these diamond hands are in on GameStop and the way GameStop has been hyped, everyone wants GameStop. Everyone wants a piece of GameStop. It's like GameStop is the 2021 version of Tesla. All right. We all know how Tesla's run up was mad. Went from $70 all the way up to, I believe the high was around, let me see Tesla. I believe the high was around $900, you know, all the way from $70 from roughly the start of the year, the start of like 2020. Okay, so let's see, have a look at 2020. So yeah, from January 2020, pretty much, or 2019, pretty much went from around $70, you know, and it's run up to $900. So that's crazy. You know, like, so the GameStop, people are trying to make GameStop the next Tesla, all right, in terms of share price, right? They're trying to pump this out. And bearing in mind, for GameStop, there's still a lot of, I'll be inclined to say there's still a lot of, like, at the moment, bag holders. But to be honest, in my opinion, it's a good bag to hold. Even if you go high, it's like for it to head back up to that price in a short space of time is crazy, you know. So it's a very good bag to hold, because if you got in around the high above $400, then that would have been, you'd have been panicking. If it went all the way down to $44 or $40, you know, you would have been panicking. But look at the price now, it's at 264. Right. So it'll be a good time to even buy while the price is lower. So at least when you buy, your average down. So your average cost is a lot less. So it might start off at 400 if you got in initially at 400, and then if you average down, you might end up having an average price of 300 or 200, depending on how many shares you get. Or a technique you can do is you could sell half of your shares at whatever price, a lower price, and then buy effectively those half of shares, you can buy it back at the lower price. So that way you average down a lot better or a lot easier or a lot more, so you can go from 400 to 300 to 200, so it's a little technique that's good if you want to average down, especially buying on the dip. Okay, so if you buy high and you want to buy on a dip, then you sell half your shares and then you get in half. So a little golden nugget for you guys. So, well, all in all, I would say AMT is definitely good. Same with GameStop. All right, so like I mentioned, it's pretty much broken above this resistance of $11. So even intraday was looking sweet. Intraday, it came back below it. Intraday came below it, and there was a huge volume around like pretty much when the market opened. There was a huge volume spike, and the share price pretty much traded above this level for the rest of the day. All right, so all these are like 30-minute candles. Okay, so it's pretty much traded a lot, above this resistance. So this right now is acting as a support. So we'll see what Monday's session brings us. And I believe Monday's session, there might be a gap up to effectively test this 1250, and the price might fall back down a little bit. Okay. But eventually I believe it's going to break out of this resistance and then head towards, if it breaks out of this resistance, guys, we're definitely on the way to the moon. So I hope you guys have got your moon boots, because we're heading back up to 20 to test this resistance at 20. So, and another thing is this huge spike up would have pretty much closed out a lot of short sellers, stop losses. It would have pretty much triggered a lot of stop losses, right? So, and a lot of short sellers or a lot of short sellers will probably be scared around this price, okay? Or there may be in fact, there will probably be a lot of short sellers around this price. So if it gets to that price, expect possibly a fairly big, if it closes, or if it gets to this price, expect a big or possibly big pullback. Okay, so if we have a look, let's pull up my trusty Fibonacci retracement tool. All right, so when this move pretty much started, the high, all right, so it came back below the 61% Fibonacci retracement line, but it seems like it's gotten back in it. Okay, so from the 38% to the 61%, I see it as a good buy zone. So this is pretty much in the buy zone. All right, so if the price takes off, okay, and tests the 20, if the price tests the $20 resistance, then I can actually see the pullback possibly to the 38. Okay, but obviously if it does that, then you need to draw a brand new, you need to draw a fresh Fibonacci retracement, because you always go from lower to top, okay, from bottom to top, or from top to bottom, depending on which direction you're looking at. But from bottom to top, okay, so assuming it just took off from now, all right, so we would have said, assuming it went from, let's say, $7.54 all the way up to the $20, okay, so the line coincides with this. So what you would be looking for, imagine it just runs straight up there. So what you'd be looking for is effectively a pullback down to around $15.64, okay, or a pullback down to $13 or $14, or basically a pullback to 38%, 50%, or 61%. So that's what you'll be looking for, and your buy zones will be between $15.50 and $12.50. So your buy zones, you pretty much have a $3 window to pretty much buy if there's a pullback to buy your AMC, right? So guys, mark what I'm showing you on this, because this is likely to happen. Okay. So, and when it does, I believe I'm going to do a video letting you guys know, or reminding you guys, or you remember that time I went live and I did the nah, but seriously, yeah. So bear those in mind. But of course, nobody, if anyone tells you that they can predict what the stock market is going to do, if they can tell you exactly how it's going to, if they have a crystal ball, then they're lying. You can't predict exactly what the stock market is going to do. You can only pretty much take educated guesses as to where the price is going to go to based on your fundamental and your technical analysis, and pretty much your just knowledge as well, because you need to, in this day and age, you need to actually have like an awareness, a social awareness. So you need to know what's going on in social platforms, like even Instagram, Twitter. You need to know what's going on with those, as well as knowing what's going on with the company, and as well as knowing what's going on with the price action. Because before the whole social media blew up, people had to pretty much do fundamental and then had to effectively do technical, and that was it. But now I believe now you have fundamental, technical, and you have your social aspect. So those three things, the three amigos you need to know about. All right. So you need to know what's going on socially as well with it. But anyway, back to my point, no one has a crystal ball. So they need to know what's going on with the company, need to know what's going on with the technical analysis, and also on the social aspect, they need to know. And then once they have an awareness, they can take an educated guess as to where they believe the share price is going to go to. But very important, what differentiates, in my opinion, differentiates a good investor or good trader from a not so good trader. In other words, a successful trader from a not successful trader, in my opinion, is your money management. So basically your management skills. You need to manage, you need to put contingencies in place. So don't go and risk more than you can afford to risk, okay, or more than you can afford to lose. Don't do that. No matter what people tell you, no matter the kind of hype that's happening, if I told you or anyone else told you, GameStop tomorrow, or not tomorrow, but Monday or next week, GameStop or AMC is going to get to, GameStop is going to get to $800. All right. You're not going to go and sell your car so you can buy GameStop stock with everything, or sell your house, or sell your grandma, or sell your kids. You're not going to do that just so you can buy GameStop shares. That's silly. So what you can do is, whatever your capital is, let's say you've got X, you never risk more than 3% of your capital. All right. So a little tip for you guys, never risk 3% of your capital, because think about it. If you risk, let's say 1%, and you get, if you risk 1% of your capital, let's say you're wrong, basically, and it does happen where you have a losing streak. So let's say you have a losing streak of maybe 12 trades. Let's just assume 10 trades, you have a losing streak. All right. So the maximum loss that you see is 10%. If you risk 1% per trade, okay, or per investment, you risk 1%. Now imagine you were like, you know what, let me risk 10% of my capital. In those now losing streak, you've blown out your account. All right. And then now you start wondering, you're annoyed because you're like, you know what, how am I going to make that money again? All right. How am I going to recoup my losses? So never risk more than 3%. Me personally, and I'll be transparent with you guys, I never risk more than 3%. To be honest, most of the time, most of my trades are actually 1%, unless I have a huge conviction towards that. Like if all the stars align with that trade, then I can go as far as 3%, but 3% is pushing it. And even at that, I'm like shaky, I'm like, oh, how you doing, Chin? Thanks for subscribing. What's your price prediction for AMC? All right, so AMC, my price prediction for AMC. So let me just remove all these drawings. All right, so right now, AMC, has pretty much closed above this resistance. So my price prediction for AMC going next week, and maybe in the short term, all right, I can see it getting towards, initially it has to break this, looks like a $12.50 resistance. So initially this price actually has to break this. I can see, well, this is a temporary resistance that's been created on the 10th of March. So I'll be watching the share price to get towards and break $12.50. And if it does this, then quite comfortably, if it does this, i.e., there's volume behind the move. All right. So if it breaks it, let's say the average volume right now is 142 million shares being traded. So assuming it broke this $12.46 or $12.50 resistance with, let's say, 1 million shares being traded, like 1 million volume or 1 million shares being traded volume, then it might possibly be a false break. But assuming it breaks it with conviction, i.e., breaks it with a lot of volume, then I can see the share price getting towards or heading back towards this $20 resistance that was created pretty much around the whole hype phase on the 27th of January. Okay, so I can see I can see the share price getting towards $20. Okay, so when it gets there, I can't tell you exactly when it's going to get there, but I can see it getting there. It could get there within 3 months, okay, 3 to 6 months. But again, it's all about what the stock market is going to do. It's all about what AMC's share price is going to do. All right. Like it's going to do what it's going to do regardless. All right. But right now, looking at it technically and with everything that's going on, like fundamentally, the company's pretty much been going strength to strength, even though they had a bad, like, well, they had a loss on the 2020 earnings report. They had a loss, but 2021 is definitely the year because AMC, they're allowed to pretty much start effectively open up business again. Right, they've started opening up a lot of their cinema chains, etc. And there's going to be movies like Godzilla versus Kong, which, to be honest, I'm hyped about going to see. I'm hyped about wanting to see it. So there's going to be those like movies, Top Gun, all these good movies coming to that. They're going to be showing them on the cinema chains, which once the whole pretty much there's a lot of people being vaccinated. Basically, when life somewhat goes back to normality, all right, there's going to be a lot of cinema goers, a lot of theater goers. They're going to be wanting to watch these movies, and there's going to be a lot of business for AMC. All right, in 2021, I believe 2021 is their year. All right, there's going to be a lot of business for them. People are going to be like, you know what, let's get back to normal. Like people will be going back on dates. There'll be a lot of, people doing that thing, so there's going to be a lot of business for AMC. All right. So fundamentally, they're doing good. All right. They're going to be doing good for 2021. And technically, the share price is looking sweet. So definitely, I'll be watching for this $12.50 resistance. I'll be watching for a break and expecting a break. And if it does that, it's going to get to $20. And then if it breaks $20 with conviction, then to be honest, the sky is the limit. And I believe AMC is going to take us to the moon once it breaks $20, so get your moon boots ready. And pretty much the same with GameStop. All right. Again, it's created a resistance that pretty much $3, $346. Almost scared myself there saying $3. So $346, there's a resistance there. So if it breaks this resistance, which I believe it's going to, then again, it's going to head to, or it's likely going to head to $482. And then once it breaks this, if it breaks this, then we're off to the moon again, So pretty much AMC and GameStop, they're definitely good buy and hold stocks. And then, so if we, GameStop. So I was trying to have a look to see if there was any new news on either of those companies, but there's no new news on those companies, and pretty much a lot of the articles are just like just people trying to get like clickbait articles, but nothing that's worth reading or nothing that's worth having a look at. So are you currently in AMC? I mean, look at all these volume spikes. You know, GameStop has just been a mad one. You know, even AMC, all these volume spikes have been crazy. You know, but it's somewhat been actually like sort of it's been calm, you know, which is a good indication. Pretty much, I believe from the 3rd of February, you know, I believe from there, that's where you can actually start seeing that a lot of investors are behind this stock. Okay, because there was a lot of volume spikes pretty much every session. How many? One, two, three, four, five, six, seven, eight trading day sessions on AMC. There was all volume spikes. All right. So that was part of the whole hype, the whole craze that was going on with AMC. And the same with GameStop. There was like huge volume spikes. But I believe at this point you can actually start seeing that, you know what, there's a lot of investors, the people that are left within this, most of which are guys and girls who are holding their shares. All right, that and it's somewhat gone back to normality. The whole system, the whole trading and investment system is gone back to normality. The stock market basically has gone back to somewhat normality with it for these stocks. Okay, because what's left is people holding on to their shares, some new people getting on, some people getting out, etc. It's gone back to sort of normal trading. You know, but I can bet a lot of people are trying to turn this into a meme stock again, or turn these into meme stocks. All right, so guys, I'm gonna end this live session unless there's anything else you guys want to see or want to discuss. All right, it's been a great session. You know, if there's anything you guys want me to discuss in terms of technical analysis or fundamental, have a look at even stocks that are not AMC or GameStop. If there's any stocks that you want to see or you've been following but you're not sure or you're currently in and you just want a second opinion, then feel free, ask me about it, and then we can do it. Otherwise, I can end this live session. You guys have been great. You know, I definitely plan to do a lot more live sessions. There's been the first live session that I've been on. So of course, as time goes on, I'll definitely do a lot more live sessions because I'm more than enjoying myself in this. You know, I could go the whole night into Saturday, you know, make a couple more coffees and stuff. But you know what, I'll save those for another day, talk about more stocks. All right, so I'll go ahead and end this live stream, guys. You guys have been all great, and I'll just call. Thanks for subscribing and thanks for the support. Definitely, I hope you've hit that notification bell. So, and for anybody who's watching, make sure you guys subscribe and hit that notification bell. There's a lot more analysis. There's a lot more stocks like to come. You know, like I enjoy doing this. You know, I can do this for days. Like farm, I can do this for bare days. You know, there's a lot more to come. So, you know, like so make sure you hit that notification bell so you don't miss any uploads that I gave, any further uploads, etc. And yeah, welcome to the family, guys. And for those who are just joining. Oh, how you doing, Chris? How's your Friday been? Definitely agree with you on that one. Hope you got your moon boots on, pretty much, because we're on the front row seats. We're gonna be the first ones to see this moon. Like a lot of people may have lost like hope or faith when they saw the whole, like pretty much when they saw the share price falling from three, especially with especially with GameStop, when they saw the share price falling from 482 all the way down to 40. Like I saw a lot of memes actually of like I saw a lot of memes of like rockets pretty much taking off and then just plummeting and crash landing, like, and people were associating those with GameStop and AMC. But you know what, GameStop and AMC, there's a lot of diamond hands. Never underestimate diamond hands. That goes out for Wall Street. They've been underestimating these diamond hands, and look, everybody who is holding their stocks, everyone who's investing wherever they can, look at the result. So AMC and GameStop definitely to the moon. So moon boots. Yeah, definitely, I agree with that. Zero gravity. Here we come. I'm just gonna be jumping around that moon, like bouncing around. I can't wait. So, but definitely, I'm especially with GameStop and AMC, I'm looking for a break above this resistance. So for GameStop, $346. For AMC, I'm looking for a break above $12.50. So I cannot wait. It's one of those, it's like the weekends, like when you're in stocks like AMC and GameStop and other good plays like CCIV, all those other good plays, when you're in those stocks, the weekends are actually not really that exciting anymore. I can't wait for Monday. Like a lot of people may have Monday blues, but man, I'm hyped on a Monday. I can't wait for 2:30 p.m. Currently based in the UK, so 2:30 p.m. is when the market opens. In the United States, I believe it's 8 a.m. So 2 p.m. I'm hyped. Kind of wish I lived in the United States so that way I just wake up 4 a.m. and then I'm all set. But 2 p.m. or 2:30 p.m. I can't wait for that time. And especially looking at AMC and GameStop every day, 2 p.m. or 2:30 p.m. Mans is lacing up his moon boots, getting ready. Yeah, moon boots, guys. Yeah, keep your diamond hands going. We have to be part of fueling this rocket. This rocket has to take off. It's already taken off. It has to stay there. We're pretty much getting towards the edge of like space. We're about to enter space. So keep fueling this rocket. Let's keep this rocket going. We're almost out of space. We're almost out of Earth. Heading towards this moon. So for AMC, the minute we get past $20, comfortably get past $20 and stay above $20, then we're effectively halfway to the moon. And for GameStop, the minute we get above 400, for GameStop, the minute we get above $482, then definitely, yeah, Jeremiah, I see those rockets. Keep them coming. I see it. But yeah, this is definitely hype. So what other stocks are you guys in? Or are you guys just in AMC and GameStop? I know this video is mainly for AMC and GameStop, but I just to get to know you guys, I like to know what kind of stocks you guys are in, and stuff like that, because I love talking stocks. So any of you guys been in or are in HCMC, just out of interest? Because HCMC at the moment may look like a lot of people may have lost interest in that, and HCMC might look like a dead thing right now. Like guys might think, what, it's flat, but I believe there's still room. I'm holding on. I'm currently in HCMC. I'm holding on. I've got diamond hands on HCMC. I pretty much going at one like 0.001, and effectively I sold some of my shares at or 0.005, and then I got back in around 0.0016. So that's how I play the game. Get in before, pretty much before it take off, and then take some off the top, wait for a pullback, get back in, ride that baby back up to test it. Was that for HCMC? Oh yeah, HCMC is definitely a long-term play. Don't worry about it. Like I'll give you an example, and basically why you shouldn't worry too much. All right. And the example being AMT and Gamestop. Okay, because a lot of guys, they would have gotten maybe a high around even $20, and they would have thought, you know what, kudos to them, if they, and the emotional intelligence, if they held on, if they had diamond hands, and held on to AMC till about $5.40, or pretty much this huge, all these red candles. Kudos to them. Those are some really emotionally intelligent guys. you know, but look at the share prices rising back up. All right, so the same would go for, I believe, could be the same for HCMC, especially with no, that's a good look. If you're looking to hold HCMC or 0.001, oh, let me see. Yeah, no. If you're looking to hold HCMC for the long term, all right, like the year out, all right, buying the dip is actually good because you're averaging down. All right, bear in mind this is for entertainment purposes, okay? But in my opinion, buying the dip is good if you're looking to hold something long term. Let me see again on the hype. If you're looking to get in long term for these, then buying the dip is good because you're averaging down. All right. If you don't mind me asking, how many share, in fact, it doesn't really matter, but for AMC, all right, so what I could suggest, yeah, nah, that's good. Diamond hands are good. Especially these are like, for instance, all right, looking at HCMC, they've got, even though Philip Morris have filed a notion to pretty much dismiss the case, basically like filed a notion to dismiss the claims for HCMC trying to sue them for the patent infringement. Philip Morris filed that notion, so they really don't want to take this to court. So what I believe they're hoping for is they're hoping that HCMC go, you know what, like they're hoping that HCMC actually go bankrupt so that they don't have to actually go to court, but that's not the case. So the minute this like actually, I'm not a lawyer, but I don't know the time frame for which they would actually go to court, or if they actually end up getting to court. But this whole court thing is a good catalyst. Like a lot of investors, a lot of people are going to be getting in, like in anticipation for this court case whenever it's going to happen. So a good thing is literally just, if you're looking to hold long term, all right, it's definitely best to just forget about it. All right, just leave it be, and maybe one day, you're gonna look at your portfolio and you're just like, wow, this really jumped, and that day will be when there's like the whole court case seems to be getting more like them going to court seems more realistic the minute they go through all that legal jargon, legal whatever. I'm no lawyer, but once they go through all that, like every time there's an announcement that, what, there's a possibility this will go to court, then you see HCMC share price rise. Just like this whole court case that I believe that was on the 26th of February. Well, it wasn't a court case, but a lot of people were believing that they were going to court. But really what was going on, why the 26th of February was very important, was a key date, was that HCMC, Healthier Choices Management Corp, basically filed basically the lawsuit with the courts to tell, look, Philip Morris, they're infringing on our technology, the whole keyless lock, or the whole key lock technology of vaping. They're infringing on our patent technology. So we need to sue. We need to sue these guys. They need to give us what we're owed. And long story short, basically they would have been, if they went to court and they won that court case, they would have been entitled to billions. Okay. So the fact that, so a lot of people were thinking that 26 was the actual court case, but it was basically waiting for Philip Morris to respond. So as they did on the 26th, they responded saying that, look, we filed a motion to dismiss this claims. It was expected. Okay, so it was expected by Philip Morris that that's what they were going to do. All right, so as a company, they're not going to say, you know what, yeah, we infringed on you, let's go to court. And a positive outlook on them filing the claims to, well, filing the notion, a positive outlook on Philip Morris filing the notion to dismiss the case is that, you know what, they might believe they did it to in the hopes that they can gather more evidence, etc., basically to fight their case. So a couple of outcomes is that they believe that, you know what, this could actually go to court, and they actually, HCMC actually has a leg to stand on, and not only have a leg to stand on, they might actually win the court case. So this is why I believe it's a good idea to hold HCMC shares. Well, for me personally anyway, I can only speak for myself really. I'm holding my HCMC stock. It could be 2 years, 3 years, 10 years, whatever. All right, or it could even be could be sitting there one day like my 80s or something, and I'm still holding my HCMC stock for as long as possible. All right, because I believe that there's good things coming for HCMC. Yeah, no, definitely. That's a good XB loan. Um, that's a good mindset to have. So you should never invest what you can't afford to lose. All right. So if a good basically a good mindset is that if it's money you're not going to miss, all right, you're better off investing it. Okay. So for HCMC, leave it, and I'm guessing you've got like hundreds of thousands of shares or even millions of shares because of the share price. So that's good, because one day, who knows, what if, hypothetically speaking, HCMC actually gets to $1? There could be a bunch of millionaires sitting around, and wishing like and glad rather that they actually got in and they held their shares. Just like guys who held their shares on GameStop and AMC, they're glad they had diamond hands. Yeah, I believe, Chris, I believe we can run up again. I believe we will eventually run up again. It's just very slow at the moment. Okay. Excuse me, guys. Oh, sorry about that, guys. The more money you can. No, you're very right. It's very true. Now, well, to be honest, in my opinion, it's never too late to get in the stock market. All right. There's always a right time to get in the stock market. And that's when you pretty much decide that you want to get in, you want to start investing. All right. And it's never too late. All right. Because I've been trading for about 8 years. All right. And at the time when I actually started on doing Forex, etc. And at the time I started, I was like, oh my God, I can't believe it took me so long to get involved with trading and Forex and thinking about the potential, how much money you can make, etc. And basically just the way the flexibility can give you, etc. I couldn't believe, so I thought it was too late. And then I just started learning from there. I've pretty much gone into stock. I still do Forex, but I've pretty much gone into stock market, in different ways, like different machines, like options trading, general buying and selling, extra. So it's never too late. It's only when you decide is the right time or you decide to get in, that's when you get in, because yeah, you may have missed out on the whole COVID era, but right now you're pretty much, who knows what's to come in the future, and who knows all the opportunities that you wouldn't miss out on because you're now in it. Ah, trust me, especially how pretty much from the later half of 2020 was pretty much bullish all around. All right. I think that's why there was this huge flash crash. The stock market's like, wait a minute, wait a damn minute. What's going on with all these bullish runs? What's going on with all these price rises? We need to correct. So the whole market pretty much corrected itself, especially in the tech sector. It corrected itself, and yeah, that's the flash crash. But hey, there's always, no matter what's going on in the stock market, there's always a bullish market somewhere. All right. No matter. Yeah, definitely, Jeremiah. Definitely. Tesla was insane and it's still on fire. I can even see that getting towards 1500. Who knows? It could even get towards where Amazon is at the moment. It could get towards 3000. Nah, it's true. It's very true. But one of the sectors that you need to look into, and with that whole dot analogy, is what is it? It's the biosector, because the biosector, especially with the COVID and what's going on around it, the biosector, throw a dart um, at any company within reason. Of course, do some due diligence, like make sure the company is profitable, they're doing things, that they've got catalysts coming up, wherever. Throw a dart at anyone and hold it, and I can guarantee you, you're most likely going to make money, especially the ones that are penny stocks, like under $10. So, but again, for entertainment purposes, I'm not a financial advisor. It's just my opinion. But yeah, I'll need to cut this live discussion. I'll definitely going to be live a lot more. All right. So guys, I've enjoyed chatting to you guys. I've enjoyed doing this a lot. I'm going to do it a lot more. This was my first time doing live. So, but I'm definitely going to be doing a lot more live, doing a lot more stocks like CCIV. I'll even look at biotech companies. I'll do penny stocks. I'll do ones on HCMC. And even though that it might be specific to certain stocks, like this one was AMC and GameStop, but I can pretty much flexible to talk about anything. And I feel like this is a much better way. And this is a much better way to get to know you guys, get to have a one-on-one with you guys, chat to you guys more, like more personal. Thanks, bro. You too. Hope you and everybody that's on this live and is watching this has a great weekend and can't wait till Monday. All right, so we're gonna be back on it on Monday. I'm still gonna upload a video for AMC and GameStop, so that's pretty much in-depth analysis on GameStop and AMC, technical and fundamental. So make sure you guys watch that. And the weekend next week we'll be back on it, the live and uploading videos. Definitely I'll get like anything, any new updates on anything, I'll get that across to you guys, keep you guys updated. All right, so I'm gonna take my ass to sleep. But yeah, you guys have a good weekend.